All right, let's go ahead and get this party started. So yeah, it has been it's been a hell of a couple of days. I think one of the big things that I really wanted to discuss. Well, there's actually several things, but I do want to say we have Stelios in the house. Hey, Stel, how's it going?
Good eye, mate. I'm good.
Oh boy, oh boy, you almost sounded Australian. Good morning, Ryan. Good morning, K-Man. Gentlemen, how you doing?
Morning, Blake.
Fresh off the flow show.
Indeed.
All right, all right. Good to see you. And I think K-Man's running around here somewhere. I want to talk just about a couple of things real quick before we get started. Well, I mean, we're just going to go ahead and get started, but I want to talk about a couple of things that I think are really important. First of all, yesterday's rejection of the 618 retracement in the S&P. I mean, that was a big deal. We basically fell to the 618 retracement after hitting this support at 67.28. We ended up bouncing off of the 618, and that's important because that means that A, it was a false breakdown. B, it ended up, you can see we noted it was a false break, and because of that, it suggests that there's still buyers in this market. But then last night in Asia, actually, you know what? Forget this. I'm gonna so I don't have to just run through all the charts. It's an easy way to do it. I'm just gonna go to the S&P room, this is the indices room. You can see last night the Korean markets. This is last night. We were only down about 8%. And look at the momentum, by the way, that Korea's had as of late. I mean, this has just been a massive, massive move, right? And so we've seen this reversal that came out of Korea, and then that prompted. And by the way, Korea closed down 12%. Now, all the European markets and even the S&P futures brushed everything off. Everything just kind of bounced back and it's fine. But I think what's more important, and this is like a chart of the FTSE. It's a throwover, just something we should be paying attention to. But take a look at where China's at. China's at pretty important support right now. Here's the Hang Seng, also at a 24% retracement, also very important support. Here is the Nikkei, which is also at channel support. It held it last night. That's so important. And then the Tokyo Exchange, which is also in Japan, also held channel support. I'm pointing all this out because when markets break globally, sometimes they break or they rally together. And in this case, we saw a little chink in the armor, if you will, of Asian markets. The big momentum play that we've seen in the Korean exchange has really come to an end, and now you're going to have people really second guessing, where we're going to go from there. Because if you're looking at if you're looking at Korea, and let me just pull it up really quick, just the actual chart itself. If you look at Korea and you're like, okay, yes, we can rally back. Of course, this is where we had the halt for 20 minutes. That gap could obviously be filled. You look at today's markets, like the S&P's up, it's grinding higher. European markets are doing a little bit better. Asia is probably going to bounce back tonight, but the question is, how far are we going to bounce back? And that's when you have to start thinking, okay, well, if we do get a bounce back in Korea, we fill this gap right here, which would be logical. If we get a failure like that, we start going into the end of the week, and if you game it out, like at the end of the week, people are going to start saying, all right, well, I don't think I want to be long into the weekend, especially if the Iranian conflict continues to drag out. And my assumption is it's going to. I mean, there are some chatter today from the New York Times. If you guys missed that headline right here, about some operatives talking about discussing terms for ending the war, and that was in the Times a little bit earlier. That really helped, our futures move higher this morning. But that's just, it's just talk. It's all talk until something gets done. But if this continues to drag on, you're going to start to see, as we get towards the end of the week, people are going to start pulling risk off. And like I said, if you game it out a little bit, and you just look at how, this is like the U.S. equities, this is the S&P. I mean, we've seen just a very, very choppy move, from the top of that channel. You can see very, very choppy moves, but ultimately holding the 618 retracement. And frankly, I would assume if things haven't gotten better by the end of the week, you are going to start to see this level come back under pressure. Anyway, I just want to throw that out there because we are starting to see global markets under a little bit of pressure. Now, I'm gonna stop here, and I want to talk to the guys. Let's start off with, since Stelios is here. Stelios, how are you?
I'm very well. How are you?
Good. Just trying to navigate these crazy markets.
Yeah.
We're about 8 minutes away from ADP. I just want to make sure we do mention that because we got to cover ADP as it's coming out. But how are you taking everything that you're seeing? I mean, from your point of view.
Yeah. Well, the big question, obviously, with Iran is when does this stop? And I think the answer is relatively simple, although I could be wrong, obviously. I think it stops when Iran can no longer fight. Because let's face it, the US and Israel together, they have almost unlimited firepower. So the problem is when, or the end is, when do they say, okay, now it's time to negotiate? And if you think about it, because Iran doesn't have any direct, let's say, big power allies like China or Russia. I mean, they obviously take their side, but they're not supplying anything to them. So at some point, the military equipment, the missiles, all the stuff that they have, it's gonna end. So what happens after that? They have no real air force to talk about. So basically, they're done. So I think I hope I'm right, but for the sake of the world as well, I think that within the week, 10 days from now, I think we're going to be seeing some real progress in terms of de-escalation. So I think markets really have to make it until then. And as we go along, I think weekend risk might actually be the opposite. It might actually be that we get a really good headline that this is finally de-escalating. So it's tricky.
And maybe that's the case, but will traders de-risk? You know what I mean? Will they de-risk following or ahead of the weekend?
Ahead of the weekend.
Yeah.
This weekend, probably, yes.
Yeah.
But
okay.
After that, I'm really not sure. And we talked about equities. Do I have enough time to take the screens, or shall I do it after the data?
Why don't you do it after we have ADP? Yeah.
Yeah. My view is, you're talking about equity indices in Korea and everything. The whole world looks at the S&P, and for me, that's the main driver. And for me, the S&P, I'll show it later on the daily chart. There are two levels of interest. One is about 66.10, and then it's the big one is 65.15. I know they're not here, all right? They're about a few percentage points away, but obviously you can get there in a day if something really bad happens. But as long as these are not breached, we are still bullish. I see no technical evidence. Even with everything that's happening, there is still no technical evidence that we're really starting a move lower. And I mean a proper move lower, not a daily or a weekly move lower. So
right, and that's I mean we're trying to roll over a little bit, but it's I mean. This chart is so familiar to everybody here. We've got, we're at channel resistance. We're, multiple, 5-wave Elliott wave counts from the COVID lows to the 2022 lows. I mean, that all signals that we are at a significant high, but the market isn't rolling over. That's the fact, right?
And the other thing I always do when I look at the market and I try to decide, I say, what would I feel if I was long and if I was short? And if I was short, I actually have a friend this morning who called me and said, man, I'm short and this market's really not moving lower. If I was short, I'd be very nervous here because you have all the reasons for this to go a lot lower, and it's not happening.
Yeah, most of you guys know like Helene Meisler. She posted something on X just a little while ago, and I've interviewed her a bunch of times. I get an email from her every day. She's awesome. Um, she was posting something like 85% of the options on the Russell yesterday were puts. 85%.
Wow.
I know it's crazy, right? I mean but also we had Jim, the vixologist, Jim Carroll. He was on here a couple of like last week or something before all of this started, actually, and he was like the market's just really it's really well protected for puts. And it's really well hedged, and that's the problem. Is you get these pushes lower in the market, everybody's hedged, everybody covers up those hedges, and you get bounces back, and that's what's really supporting the market. Positioning is just really squared up for any type of downside risk at this moment, anyway.
Yeah, and the problem is you have all these valuation of tech stocks, AI stocks, ridiculous valuations. But still, you look at what's been happening. I have friends who work with AI, with Claude and all those things, and they tell me the work you can get done in a day is now ridiculous. So,
It's crazy.
it is crazy. A friend of mine developed a whole app, mobile app, everything within 2 days, and a complex one. And I'm saying, okay, this is just ridiculous. So, yeah, so valuations would say that we're on a high and we're a bit frothy. We have Iran as a situation. You have
Stelios, you muted yourself.
Sorry, I clicked it by accident. So you have valuations which are high. You have the Iran situation. You have yields which are okay. They're a little bit lower, but they're not really collapsing yet, which would be a headwind. Sorry, a tailwind for stocks. And yet stocks are not going lower. So what happens? If you put a gun to my head, I would still buy them here, unfortunately.
Yeah, there was a comment said, "I'm glad Blake has become a global stocks trader or analyst." This is my 30th year as a trader, and I got my Series 7 32 years ago. I've been paying attention to global markets probably before you were born, or at least somewhere in that vicinity. So the
Well,
fact of the
that
matter
person has a Galaxy S8 Plus, so he's probably our age.
well, the fact of the matter is, I pay attention to global markets as a currency trader predominantly, and even though I trade mostly S&P futures and mostly currencies, I pay attention to everything that's happening. So
As you should.
as we all should, and I started actually doing that probably way before a lot of people, because markets became increasingly interconnected over the last 20 years. So it's one of those things that you have to be paying attention to at all times. And markets correlate more than others. And by the way, we're just a few minutes outside of
30
our data.
seconds.
Yeah.
40
So let me
seconds,
pull up
yeah.
the data flash really quick, and I'm going to pull over the markets that will matter at least right now. Excuse me. All right. Which I have the S&P to the left. Dollar index is right in the middle. Dollar's feeling a little bit of pressure this morning, and yields are 10-year yields are right here. Okay, ADP, we're expected 45,000 jobs to be created. I know a lot of us put our jobs numbers in for the NFP on Friday. What your guesses are? Mine was, I believe, below 30,000. Oh, I think it was 33,000, if I'm not mistaken. We'll see what the private data looks like.
63.
That's good.
Good data. Thank you, Ryan. So the dollar has not responded to that at all.
Prior month got halved from 22 to 11.
Okay, all right. Well, there you go.
Non-event then. Okay.
Yeah, a little bit of a non-event. So no real reaction either at all. You can see S&Ps, they're just kind of flat here. All right. Hey, well, Stelios, I'm going to give you the charts in a minute, but let me bring in Ryan and K-Man, get their observations from the Flow Show. I actually listened to the Flow Show this morning, got a chance to. So good morning, Ryan. What are your thoughts as we come into today? Hey, when you saw the Korean markets down 12% this morning when you walked in, what'd you think?
Lemming trade. You said it. You said it at the start. Markets have moments where they move in one direction.
Yeah.
European, US markets through the toys at the pram yesterday, and Asia just followed. What you need, I agree with you that if we see decent gains today in European and US stocks, which are trying at the moment, then you'll get a decent bounce following in Asia, probably headlines permitting, of course. We're in that one follows the other mode at the moment. But as for the rest of it, I think today's market is, as I say, it threw its toys out the pram yesterday. I was getting a tingle that we might see a bit of a big blowout or bigger blowout. But my peak fear index happened at about 3:15 yesterday UK time, when we all hit bottoms in the currencies and stocks and whatever, and then staged a bounce. So I think the market's in that mood now. It's had its little panic. It knows what's happening. The situation hasn't changed in Iran. Stuff's getting lobbed at this way, that way, the other way. So the risk is still there. But I think we'll probably move into the situation where the market wants new headlines. It needs something more than what it's already got.
Sure.
So I think you were right. We could see a bounce today. My fear is that if this thing is looking like it's going to drag on, the bounce might be limited, because then the market starts looking at the longer term impact of all this. And I think then we might see stocks grinding lower, the dollar grinding higher, maintaining the trade that we've seen this week, but perhaps on a slower basis. Again, headlines permitting.
All right. Well, headlines permitting. So that's that's a good assessment, Ryan. Really appreciate it. K-Man, what were your views when you came in this morning and you kind of saw the mess? Good morning, by the way.
When I saw the mess,
Yes.
well, I didn't think much about the Kospi, because first of all, it's not a very large market. Secondly, they rely heavily on energy supplies, and I was only half surprised. But as Ryan already said, yesterday was a day where a lot of markets went down the pan. And we walked in this morning, and things were, I'm not going to say completely quiet, but at least not as dramatic as they may have been in Asia. And I've got to say, since even last week, and I think the comeback even from Chinese New Year, it does seem that Asian markets do not find their full liquidity back, and they tend to exaggerate moves that have been seen elsewhere. And I don't think there's full liquidity in the Asian markets. Looks a little bit fragile. So any move will probably be exaggerated in the Asian time zone. But anyway, so yeah, this morning we came back. Things not materially changed from where we left it yesterday after the bounce from the abyss in euro dollar, Aussie dollar, cable, etc. And then we took up the same kind of market that we saw on Monday, rather the have energy versus the I don't have energy, and then came that New York Times headline, which is, by the way, not a new thing. It's a few days old, or at least 24, 36 hours old. But the market seems to want to hang on to anything positive it can get right now. So yeah, situation fluid, but could be that we have seen the worst of the panic yesterday.
Okay, yeah, and I agree with you. It is definitely the worst of the panic. And here's the other tell. If you guys missed it yesterday, is the false breakdown of the euro. And I want to actually go back a little bit and take a look at this euro chart, because I think it's really important. If you guys recall, this was this right here above the 120 level. That's when President Trump said, he was talking to the Iowa farmers, and he said, I don't care about the the dollar's doing just fine. The weakness doesn't bother me at all. Euro spiked above 120. We got that false breakout. We're like, oh shit, the false breakout's going to lead us to a breakdown. Well, ultimately it did yesterday. And so now you just got the market giving us a false breakdown below channel support, and the one it was the one 1580 level, excuse me. And now you're getting that that reversal. And by the way, if you guys are Forex Analytix subscribers, we put in a pattern in play yesterday. I'll just do this so you guys can see the very top one, active pattern in play. Right. Oops, sorry. Right there. False breakdown. Yesterday afternoon, it went out, and we've gotten that bounce already in the euro. Now, as Greg was here yesterday, he said, I would expect that we find sellers somewhere around the 116.70 level. We have been as high as 116.55. So Grega's done some really good work as far as looking for a bounce. But now the question is, are we going to continue to see dollar weakness, or is the dollar going to go up, or is the dollar going to rally from here? A lot of people have been pointing out the magazine covers, The Economist and Barron's, but that was at a fever pitch. If I had to count yesterday and the day before yesterday, so I'm going to say, well, actually from last week to yesterday, I could probably count maybe 12 to 15 different people that I follow and I read and I listen to that have talked about the magazine indicators. So that means it was a little worn out. The whole, sell America trade is too old, too well known. We got to start buying dollars as a result of that. That inverse trade, I think we just hit the tail end of it, and that was probably the gist of it now. But now I think the dollar is pretty well positioned. I think it's more evenly positioned. The question is, where are we going to go from here? We just saw some economic data that looked not so bad. So Ryan, if you had to guess, where do you think the dollar is going to be moving from here?
I think the dollar continues to be bought up, maybe not as fast, if this thing is going to continue to drag on, because I think the market might get I wouldn't say complacent, but if it's just limited to things being locked back and forth without any big things getting blown up, we might see some goldfish mentality, forgetting about it. But I think the longer term impact is going to be to Europe on energy, inflation, heavy energy importers. I think that's going to put the pressure on their economies, which leaves the US to continue to do what it does. So I can see the sell America trade is probably dead and buried for the next few weeks at least.
Okay, so in other words, if we do see a rally in the euro and we make a move to, like, let's say 117.50, this should be a decent short up here, somewhere like that, or maybe even the short is today.
Yeah, I think that's the case. I think there's a chance we see, as I say, stocks in Europe are doing pretty well. If US puts in a good performance today, then we probably see the dollar selling off a little bit, and then nothing's got away, nothing's changed, and I think that's going to weigh on sentiment and risk for the next few weeks, rather than what we're seeing, just volatile moments this week.
All right, well, and I'm sorry, I got to take a step back and just realize. Oh, and by the way, since we don't have a guest today, we can go a little bit longer, and we have a full house. Steve's even here. Stellios, I know you had a couple of charts that you wanted to show. Were you going to show stuff on the S&P?
I was going to show the S&P, just a couple of things.
Yeah, please, let's see it.
Okay,
show me your pants.
No, I won't do that. Okay.
He's not wearing any.
Yeah, exactly. That's why.
He never was.
So for me, the S&P, it's obviously losing momentum, but it's a sideways consolidation. And look, the RSI from September, when it was overbought, it's gone back to below 50, and we're about 100 points higher than where we were before. So really, this is still nothing technically bearish for me. I need to see a break of support, which comes in at 66.10-ish, and then really the big one is 65.15. for me to say, right, this is it. With this is a change of momentum to the downside for a continuing move lower. But for now, I'm not seeing any of that. So so that's my view of the S&P. Obviously, I look at daily charts. I don't look at 5-minute charts or things like that. I look at a little bit longer time frame. And why is it taking so long to load? Come on. The 10-year US yield is interesting because last time I was here on Friday on F.A.C.E, this had broken down, and I said, "Yo, this is it. I think we're breaking it down, going towards 360." But no, the market likes to probably take stops on all sides and come back. So we're now back into this, and it's tightening. I still think we go lower, but not quite yet. And a couple of things we really need to look at is cryptos, which are finally showing some life, and Bitcoin is off these lows, but really, obviously, I want to see if 75K and above for my macro buys to switch from bearish, which it has been from 100,000. When we broke below 100,000 here, I said, right, this is bearish now. I think we're going quite a bit lower. If we break above 75, I'm going back to neutral, and I'll reconsider. So crypto's doing very well finally, and outperforming for a change, because it's been a couple of months of a pretty bad underperformance. And I also want to show, obviously, metals, which I always love looking at. And well, how can I say this? Gold is still very, very strong. I would have expected it to perform a bit better given the Iran situation, but it's still going in a 45-degree angle. RSI has now reset, so I see no reason why this is going to collapse anytime soon. Could we have a correction? Of course we could, but for the moment, I don't see anything.
Yeah, it's just finding the levels to be long now.
Yeah,
right?
Exactly. So if we get close to 5,000, I think that's really not a bad place. Nice round number. It's a previous low as well. Silver, on the other hand, is a lot more volatile. It's dropped quite a bit from its highs. But then again, it had gone way, way faster than gold on the upside. And this move here just took out so many longs. It's trying to find momentum again. This is an interesting level, say 86-ish. We have the 50 DMA as well. We really have to push higher decisively for me to say, right, this is it, we're resuming higher. The one I really like is platinum, and I am long from 2160 actually, so these levels. I really like platinum because, as I've said ad nauseum before, I like the macro thesis of it, and I think it's really, really underperformed, especially against silver over the past few years, against gold as well. And this is my preferred long, which I am as well. Currency-wise, I have really no view at the moment. I mean, the euro-dollar move, like you pointed out, was quite impressive. Took out stops on both sides probably, but the way I look at things, I have much wider targets and levels. Really, I have to see something below 114.7 for me to say, right, I'm getting into this one on the short side. So for now, I'm still watching and waiting on the currencies. And that's pretty much it. I mean, again, a couple of things I said last Friday. The two currencies that I would not want to be long dollars against is Norway, one, because why is my PC so slow today? Because I still think there's more downside on dollar Norway, and the other one is Aussie dollar, which I think will probably see more upside. So these are the two I'd like to be long against the dollar, but overall, I think the dollar might continue to show strength here.
All right. Well, we'll
appreciate it.
Yeah, appreciate that, Stelios. Real quick, I got a couple of things that I need to cover before. Well, we're gonna bring in Zach Mans. He's gonna come in here today in a few minutes, but I still got to go back to the rest of the team. So Zach, just stand by. If you guys have not seen, as of yesterday, we implemented a 30% off all instant funding, because obviously the volatility. I mean, that's it. It's like volatility was so high. It's like, okay, guys, we need to get this out here for our traders, because we've had a lot of people are like, hey, I want to get an instant assessment. We're like, fine. And we had people actually writing us asking if they could get like a discount. And we're like, you know what, we need to just do this for everybody. So we have a 30% off plan, off all plans at the Trader Funding Program. The code, you have to use the code at checkout, TFP Vol 30. So Trader Funding Program, volatility 30, TFP Vol 30. That is the discount code. Make sure you guys use that. Also, and Ryan just posted this in our chat that we're giving away one of our TFP assessments for the NFP competition. So make sure you vote. I think I voted 33,000 jobs. I think I did. I'm pretty sure I did. I have to go back and check. Ryan, what did you vote?
I haven't yet.
You're pulling a Michael Brown. I get it.
I'm going to wait for Michael Brown to go, and then I'm going to go either one above or one below.
Bunch of shysters out here, I'm telling you. All right. No, that's funny. You wanted to make sure you see all the data, including today's ISM services. So we're going to get to that. Well, that is going to be coming out a little bit later today. Real quick, before I go to Zach, I want to bring in Steve, and I want to come back to K-Man. Steve, hey, good morning. How are you?
Good morning. I'm fine.
Good. Hey, like I said, I have a surprise guest. He's popping in today, Zach Mans. He's going to be coming in. I'll take over with him in just a little bit. But before I get to him, I wanted to bring you on and just from your point of view, how are you seeing everything right now? I mean, yeah, I know we do the Morning Edge together, which is our show, after this show. It's for our traders at Forex Analytix. And you talk about a lot of different markets, and what's one market what's really jumping out at you right now?
I mean, it has obviously been a very volatile week so far, right? And for more than obvious reasons. So it's, sometimes, we have to focus on one or two things that are moving in the markets. Obviously, this week, that's not the case. We have multiple things moving, multiple things at interesting technical levels. If I had to focus on a couple, I would say I'm paying close attention to the potential of F.A.C.E breaking down, which it hasn't done yet, despite initially showing that it would. I mean, if we're talking about European bourses, especially the DAX has been hit very, very much, but the S&P hasn't managed to break down, which is the most instrumental, obviously, among the global indices. The Nasdaq hasn't broken down yet. And the other thing I'm obviously focusing on is the big reversal we got in the metals, which is something that I expected. I've been expecting this rebound in metals to end up failing. I didn't expect that metals would get back to all-time highs because I think it's too premature. Of course, I haven't changed my mind or lost my faith in the outlook that metals are in long-term bull trends. I'm still 100% of the belief that this bull trend is far from being over. But on the other hand, I think that in the very short term, there is a lot of potential for more downside, or at least some kind of a prolonged consolidation, so we can work off the extremely overbought conditions, right?
Yeah.
And of course, last but not least, crude is in the spotlight as well.
Yeah. How do you think? Let me ask you this: is crude going to go? I know it's a guessing game at this point. Is crude going to break 80 or break back below 70? Because these are the levels, right? So are we gonna do? I mean, you have a technical view of everything, but like based on what you're seeing here,
I think that as long as we're trading above 67.5, crude has the potential to head even higher. Obviously, some extremely fast de-escalation on the geopolitical front can reverse that. But unless something like a very, very fast de-escalation happens, I don't think that crude's current rebound, which has started gaining impulsive characteristics, should be ignored.
Okay, well that's fair enough. All right, I'm with you on that idea. So Steve, thank you very much for your comments. I always appreciate them. I want to come back to K-Man really quick, just before I jump over to Zach. K-Man, so what are your parting thoughts before wrapping up here? You know, I know we get you in the chat rooms and everything, but not everybody's in our chat room. So, what's your parting view before we head out? You know, for the session here.
Just to repeat, I think it's still a market where if you are right, you cannot forget to take some profits. And for as long as headlines are dropping, we hear all those headlines, and they're coming in one day, one minute, people are maybe going to negotiate, but the next one, naughty stuff is still flying around. So for as long as that happens, I think you can have positions. You define which currency against which other currency is the best to have. I have my opinions about that. People in our room know. I belong Aussie, belong cable, but I'm taking my profits, and because I don't know where the next headline is going to take markets. We've seen yesterday that it can get naughty, but then we have also seen afterwards that it can get naughty on the other side. You were showing the moves earlier on the charts, Blake. Aussie rallies 1.5%, like if it was nothing from the lows, right?
Yeah.
1% higher in the euro dollar, but it can happen to the other side as well. So if you are in profit, and if you were lucky or have seen this move coming, and just take profits, even partials, you know, just make sure that you bank stuff, and because the next headline may not be as friendly for your position as the prior one. So I think we're still in a relatively short-term market here, but I would say, all in all, I think that yesterday was one of those days where we went to a little bit of an extreme in some currencies, and then I'm thinking maybe about cable. Yesterday bounced really well of that 132.5. Aussie bounced really well of that 69. What was it? 30, 40.
69.50. Yeah, that
Big trend line. That trend line, I have it on since for months. That black trend line that you have, I have it on my Aussie dollar for months. And yesterday it did a very fine job of it. So I think there's still it's tradable, but you have to be a bit patient to get in. And as I said, don't forget to take profits on whatever you have right now.
Yeah, that's and Ryan and you were both talking about that on the Flow Show this morning. It's really important in this type of environment.
I can't agree more with Kay. This is an environment that can change very, very fast. So
yep, take it when you got it.
Take it when you got it. Don't consider that moves are here to stay necessarily, right? And anything that is any move that is heavily dependent on geopolitical developments, it's, you know, live by the sword, die by the sword. You know, trades that worked extremely fast because of a specific situation can also stop working equally fast because this situation has completely unraveled, right?
Yep. And you're right. And you know, this is a bird in the hand is better than two in the bush. And so that's that's something you need to live by. All right. Thank you, team. I really appreciate you being here. Ryan, K-Man, Stelios, is great to have here. I know already bolted. Steve, thanks for being here today. Really appreciate you guys.
Cheers, everyone.
Thank you. Bye-bye.
Thanks, guys.
Yeah, when you're talking to our team, like you got Ryan, who was a trader on the life floor like 30 years ago. You know, like I said, I started trading in 1996, November 96 at Block Trading, and before I became a partner in my brokerage firm. in 99 in Dallas. You know, so you're talking about between Ryan and I, 60 years of trading. K-Man spent 40 years on deal desks, major banks, you know, and then Steve obviously has decades of experience. I mean, we got
Damn, I'm
over.
now starting to feel old.
You are
Indeed.
old, man. You got more
Indeed.
gray than I do. You got more gray than I do, and I have to remind myself you're 10 years younger than me. Ha ha ha! Take that. Sorry, Steve. I had to do it.
I'll play you a basketball game and let's see who's older.
Yeah, I'll watch. I'm going to sit by with a beer. All right. Speaking of which, sitting by with a beer, I'm going to bring in Zach Mans. And thank you, team. Really appreciate you. Zach, how are you? Good morning.
I'm doing great, Blake. I did not realize you were that old.
I am 53 and I turned 54 in a week. Or no, in a week, in a couple months. Excuse me.
All right. Well, I guess I'm like 8 years younger than you, so I'm closer to Stelios. But you don't look it.
Thank you. That's because I'm half Asian. Hey, I mean it's a real thing.
If you are 8 years old, younger than him, you're exactly my age then. 1980?
Yep, 1980.
Yep, we're exactly the same age.
We're part of that orphan generation that we get. We're definitely not part of the millennials, but the Gen Xers don't want us either.
We are the very, very end of Gen X, exactly. Barely made it.
No, you're not. We don't.
Oh, we are.
No, we don't want you. I agree with Zach.
Nobody wants us. What can we do?
You're abandoned.
But we, we remember Max Headroom. So if you remember Max Headroom, and you can't, like, you're not part of the millennials.
That's true. Max is Max is pretty awesome.
Awesome.
Anyway, so Zach, what's happening in you're in Canada, right?
No, I'm in Maryland.
Oh, okay. You're in Maryland, right?
Yep. But I grew up in Oklahoma City, so not so far from Dallas.
Yeah. Oklahoma City. I'd travel north to that area from McKinney to get to the county line to go buy some liquor every once in a while. So yeah, nice. I've been it. All right. So what are you seeing from your point of view? How things, how are the markets? Like how are you treating in today's markets right now? How are you taking everything in?
We're very happy to see some volatility come back. Things get a little bit boring, and everybody thinks that that they don't need analysts like us. So, do you want to take a look at some charts? I've been playing around a lot with ratios. Let me go to here we go. So I thought we'd look at just a SPY to gold ratio. I've been looking at ratio charts for a while, and I had to switch my ratio charts to from an SPX gold futures or an ES futures and gold futures to just SPY versus gold GLD, because these don't have they're not continuous futures contracts that constantly roll over. And they don't have to deal with like whether or not you back adjust or don't back adjust, which has been a challenge in our higher interest rate environment. The challenges of trying to maintain a long-term Elliott wave count on a continuous futures contract that is rolling over and then back adjusting and has gaps because of the rate environment. So I started switching over to just looking at the ETFs for a lot of things because that smooths that part of the data out. But we got the move down that I've been looking for between the equity and gold ratio. And I don't know if this is all of the longer term correction that I wanted to see. We hit a 50% retrace as a big 3-wave move down. I think that might have been just a larger primary degree A wave, but that means that we can have some period of time where these jockey for positions. The basically all the metals are trading very similar with some nuanced differences between silver and gold and platinum and palladium and copper, and we can take a look at some of those. But I do think that this, and one of the things that people always ask me, well, what is a ratio chart telling us in terms of direction? And it doesn't necessarily say a direction for either of the instruments that you're looking at. It's just telling you possible trends in relative strength. So this says, in the short term, at least, looking for more of a bounce here, at least more of this C wave inside of an A wave off of the recent, whether it's a high or a low that we saw, whether you're talking about equities or in gold, we can see more strength in the short term for equities, more relative strength. So that doesn't necessarily mean that equities are going to go a lot higher and that metals are going to go a lot lower. You could get a move down in GLD to like the 380s, which I don't know exactly what that would translate to on. That would probably be about 4,200, 4,100s in GC futures, as the measured move, just in terms of treating the recent bounce that we had as a corrective retrace from the initial move down that we got at the end of January into February. And the equity market could pretty much stay where it is, and you get up into this 1.7s, 1.8 ratio between SPY and gold. So when we look at the Elliott wave, we are treating, at least the metals and mining and agriculture service, we are treating this move up since February as a corrective bounce and looking for a measured move down for more of a flat consolidation. And I know we're ultimately more bullish longer term on metals and certainly on miners. But more of this consolidation first would help work off some of that overbought that you guys were talking about before, from the big run up that we had in 2025, and give us a much better base to work off of for the next longer term swing. And in silver, I think that's a little bit more pronounced as well.
Okay, so you're still looking for a bit of a correction in precious metals as well.
Yeah, particularly if we stay under. I mean, if we get over the high that we saw at the end of February, then that gives us, at least, especially from here, that would be 5 waves up off of the low in silver. So you've kind of negated any potential start to a move down. But I'm looking at this as a corrective bounce, as a 1-2 start to a C wave, heading down towards the 60 region on silver.
Okay, all right.
And from there, I think we can get up to the 130s, 150s.
Do you think that silver will ever trade back below 50 again?
I after the next move, I think we could get a pretty substantial reset on silver. So I think from oops, I'm going to go to the gold ratio, from the 130 to 150 region. I think it could drop back down into the 50 region or below.
Okay, all right. So traders might be able to get to reload on silver back down at 50 at some point.
Exactly.
Okay,
exactly.
All right.
So this is GDX relative to gold itself. And this has a nice setup for some additional consolidation to the downside, which tells me that maybe gold doesn't quite correct as much, that we get a bigger move down in the miners proportionately, and gold is maybe a little bit more muted in its consolidation. But this is really kind of, it's interesting that this ratio is kind of tracking a similar count to what we're tracking in the metals and the miners themselves, which I guess makes sense. But I would have thought that there'd be either less of a clear pattern here because there wouldn't be as much fluctuation in those ratios, or it would be something very different than just filling out the same way.
I got a question. I know you look at ratios, Zach, but like as a trader, and because I want to correct you from earlier. You're like, when things get a little messy, people need analysts like us. No, I'm a trader, so I'm actually I just kind of show what I see,
right?
Because I'm constantly in the markets. So how do I make a decision based off of ratios? I mean, I want reason to be buying or selling something.
Right. So
when I
use
say
that
a ratio, it doesn't really make sense to me
confirmation and just saying, all right, where do I want to focus my efforts? So,
okay.
I want to look at the equities and see the pattern that we see that might send us higher. But that relies a lot, as you guys were talking about. There's some pretty key support levels that we are testing right now, and if those break, then there's a lot of airspace underneath. So I'm much more highly selective on what I'm trading to the upside when it comes to regular equities. But the patterns that we have right now, especially the short-term pattern for some further consolidation, and it may not necessarily be a short setup for everybody. Like I'm still long-term bullish on the metals and miners. So I don't, I don't want to be net short on metals and miners right here, but I am I have raised some cash and I'm looking for this 90 region in GDX to get tested and the equivalent region on a lot of individual miners that we track, and have limits and orders set to add back into some of those positions that I trimmed at the beginning of it in January and into the bounce that we saw. Most of it, got rid of it in February and was only scalping long for this extension higher for that B wave. But off of that recent high, have a similar 1-2 setup to the downside in the start of that C wave, to get more of that flat consolidation. So if somebody did want to scalp the short, you do have a good entry here on that corrective bounce into the 109 to 113s, as the wave 2, and that setup to the downside invalidates if it gets over that high at 120. But this is really the sweet spot of resistance, if you're looking at that as a hedge for metals and miners positions, or if you're just looking at it as a good scalp.
Got it. Okay. All right. So let me ask you a couple. Do you cover crypto assets?
Not as much. Ryan focuses on that in a dedicated crypto service. There's some adjacent things like some of the miners that we provide charts on. I'm not quite as excited about most of those charts.
Yeah, I was gonna say it's a little bit more challenging, from a how should I say, it's a little bit more challenging these days for some of these crypto names, and that's why I know they're in focus with a lot of people at the moment.
Right. I mean, I keep a pretty good count on Coinbase. There's a chance that this was all of a larger degree wave 2. We got in between a 382 and a 50% retrace at that larger degree. But the more prudent way of counting that is to say that that's only the A wave of a much more normal, wider, and deeper flat consolidation for a possible primary wave 2. So this is kind of crypto adjacent, in terms of an asset that is related to the crypto markets. This was an interesting consolidation here in the middle of this smaller degree C wave. It's a little bit big to be a 1-2 of this C wave. If that is a wave 2, then it probably means that this is stretching up closer to a 1-2-3-6 or 1-3-8-2 extension. And this is the third, and it's going to need a fourth and a fifth. But sometimes you see moves that look like they should be a wave 2 inside a C wave, and it's actually an A, B, and you're getting a C wave, and that's a Y instead of a full 5-wave C wave. So just some Elliott wave nuance there that sometimes can throw people for a loop when they're looking for that 5 waves, but you get into the normal fib resistance for your C wave, and you don't get 5 waves to complete. So.
Got it. Okay. All right. So, let me ask you about like equities right here. I mean, we've obviously seen a sell off in the S&P, to support. It's been very sticky. Equities haven't really, haven't really rolled over. What are your thoughts from here? Are we going to new highs, or are we going to be eventually breaking down?
So as one of the lead analysts for stock waves, Garrett and I look at hundreds, if not thousands, of individual stocks, pretty much on a weekly basis, and are maintaining counts for that. There's a lot of firepower to take things higher. Certainly recent support levels are pretty important, and we started to test those and would like to have seen the February lows hold rather than that extension lower. But there's a lot that can support this entire move off of November as a 1-2 start to another extension. So at the larger degrees, everything in the market is very overextended off of the 2009 lows and even off of the 1930s lows and can count complete. But we keep getting these like resets where it's not enough of a consolidation to break down any real support, and other individual charts have all like rotated around, and now you have good setups in Apple, you have good setups in Tesla, you have setups like Nvidia all over the place, Netflix, that can really take things higher, Boeing especially. And it's hard to get overly bearish unless some of those setups start to break, or we really start to break some support from the low that we struck the other day, or breaking under the November low. That can start the negative feedback loop, and things could get very nasty to the downside in a hurry. But until then, looking for more of these choppy ending diagonal extension patterns to head higher over the coming months. And that, as we talked about with that equities to gold ratio, you could chop around working on more of this rounded top for a couple of months to the upside in equities, not really getting much past the prior highs that you saw in January, but nominally higher highs in actual new all-time highs in a lot of individual names and other sectors. And you get that correction in the metals and miners, and then those are ready to soar off to new highs, and you're still just kind of languishing here, but giving the windows open for a lot of individual stuff to have some good runs.
Okay, so basically what you're saying is new all-time highs are not off the table. There's a lot of names that can actually take us there. Downsides are going to be fairly limited. So in other words, you don't see volatility really picking up from here, like from your point of view.
Unless that November break, no, the November low breaks, and that starts like the cycle of negative feedback loops. That's going to start putting some pressure on a lot of those good individual setups and in the sectors, and they're going to start breaking some support levels that are not as likely to recover. And then it looks a lot more like recent highs were more significant tops.
Okay, all right.
But off of that, even if you were going to argue strongly that this was the top of everything, this is the most corrective looking start to any major downside move I've ever seen. So at best, you're dealing with maybe a leading diagonal starting to the downside, and it's not even a very aggressive one, with only nominally lower than the February low at the most recent low, and pretty bullish looking reversal off of that.
Got it. All right. Very, very good. Where else do you think traders should be focused, especially with, in light of everything that's happening right now? I mean, is it crude oil? Should they be looking at metals? Should they just, keep their focus on, hey, let's just put our blinders on and just keep looking for equity markets to move higher and individual names to do that?
I mean, as the host of Stockwaves and also the Metals and Mining and Agriculture service, and that you get a discount when you sign up for both of them together. I say it's very much a stock pickers market. We post our wave setups on individual names and sometimes on sector trades, and we update those when they get to resistance levels. And despite the choppiness in the market, we have longs that are constantly getting updated because they're hitting their next resistance levels. We also have short wave setups that are continuing to follow through on their patterns to the downside. So it's very much not an all the same kind of market like we had at the COVID bottoms and other times, and much more of, be very selective. Not everything in an entire sector is also matches the chart for the sector or matches the top three names, or the top three patterns. So every Thursday we host a webinar for our Stockwaves members where we drill down and look at a particular sector. We most recently did airlines and travel names. And there's a lot of disparity there. While we like the sector overall, some of the names like Delta, United, Copa, and Norwegian Cruise Lines look really strong and healthy. A lot of the other ones aren't quite there. So they sort of look like they're filling out a similar pattern, but it's much less clear and much less reliably bullish like those.
All right, very good. Very good. Well, Zach, I'm sorry about the mix-up that we had today. It's all good. I know you gave me a thumbs up, and I'm like, I'm like, oh shit, I don't even see that. Usually it's so busy. I'm like looking around for usually answers. And so I send out event reminders. I'm a little bit different than our previous host because I like to actually put things on my calendar and make sure that I'm very well aware and prepared for
So we
people
can
as they're
switch over to
coming on.
email for that.
Yeah, exactly. That's when I usually send out an email, event reminder and everything else. So I appreciate it. So, all right. So you could be found at Stock Waves, and
Stockwaves and the Metals Mining and Agriculture Service are subscription services that are part of ElliotWaveTrader.net.
Okay.
They can be signed up for as part of a bigger package or individually. And then on X, I'm at Zach Mannes, ZACMANNES. And you'll find me trying to share some stuff there, good content, and also be a little bit silly from time to time. And then I also started contributing to the Yahoo Finance community. Similar to basically I try and duplicate whatever I post on X on Y as well, or Y exclamation point. But
Awesome.
it's an interesting forum that is Nathan Warden from Yahoo has been working really hard to get contributors and content providers to post, and then they're slowly trying to ramp up letting people in that are not like invited contributors and working on moderating, but it's a good place.
Awesome. Well, Zach, really appreciate your time today, and I'll circle back with you and get you back on here, here in the next couple months and see where we're at, and see if we do trade to new highs in some of these names that you've been discussing.
Fantastic.
Well, thank you so much for your time today. Appreciate it. Make sure you guys give Zach a follow on X or at Stock Waves, which is in the ElliotWaveTrader.net ecosystem. So thanks again, Zach, for joining us today.
Thank you.
All right, buddy. Max Headroom, everyone, give him a big round of applause. Applause. That was horrible. I know. Take care. All right, buddy. Take care. Thanks everybody for tuning in.